Good morning. Yes, we're into April already. Where do the days go? Yes, it's the 3rd of April and welcome to our regular Monday morning roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and then we'll take a look at some of the more significant highlights afterwards with our own thoughts and analysis. So, as always, let's get straight to it. So, the economic numbers being issued this week start today with an update on Chinese manufacturing PMIs, and we'll be discussing these in more detail straight afterwards. Also today, manufacturing PMI from the UK, the Eurozone and the US, and the ISM manufacturing PMI also from the US. Tuesday is interest rate decision day in Australia, and that's something that we'll discuss in more detail in a moment. Tuesday also brings the PPIs from the Eurozone, the US factory orders and JOLTS jobs openings. It's interest rate decision day in New Zealand on Wednesday, and also on Wednesday the German factory orders, the UK, the Eurozone and US services PMIs and the US ISM services PMI. The PMIs continue again in China on Thursday with their services PMI, and we'll discuss these also in more detail later on. Also on Thursday, the US initial jobless claims and the jobs data from Canada. And we'll be discussing the US non-farm payroll report towards the end of today's video with their release due out on Friday. And the companies that we'll hear trading updates from this week start on Tuesday with annual results from Saga. And we'll be giving our thoughts on that later on in today's report. And Tuesday also sees results from Kirkland. Full year results are also due out from Hilton Food Group on Wednesday, and again we'll discuss these in more detail shortly. And results also on Wednesday from EnQuest and Lookers. And finally for the week on Thursday, Constellation Brands release their Q4 results. And we'll take a closer look at these later on in the report. And to wrap up the week, results from Levi Strauss. Well, fears eased across the previous week as the banking crisis appears contained and fears of the sector imploding dropped sharply. Indices in the US and Europe rebounded strongly, with the Nasdaq leading the charge as investors continue to price in rate cuts by the Fed by the end of the year. Well, looking ahead this week, a holiday-shortened week, will see the US NFP as the key focus to provide further clues as to whether the Fed could pause those rate hikes or not. Company earnings have quietened significantly ahead of Q1 earnings season kicking off later this month. So let's take a look at this week's bigger stories in more detail. Today, OPEC's Joint Ministered Monitoring Committee, the JMMC, will be having their monthly meeting. In the previous meeting at the start of February, the committee reaffirmed its commitment to the previously agreed output cut of 2 million barrels per day. Well, the committee is expected to give a no-change recommendation at this meeting. It's worth keeping in mind that the JMMC is an advisory committee and doesn't make changes itself. A full OPEC meeting is scheduled for June. And also today, China will be reporting their Caixin PMI figures. Well, the economy recovery in China, the world's second largest economy, has been bumpy so far. But in a promising sign, the manufacturing sector returned to growth in February after 6 months of contraction. Expectations are for the sector to have expanded further in March to 51.7. Meanwhile, service sector activity in China was also encouraging in February, jumping to 55. The sector is expected to grow at a slightly slower pace in March to 54. Of course, the level 50 separates expansion from contraction. Tuesday sees the Reserve Bank of Australia releasing its latest interest rate decision. Well, the RBA raised rates by 25 basis points to 3.6% in the last meeting. That was the highest rate level in over a decade. The RBA hinted in the same meeting that they could pause hikes at the current level to assess the impact of 10 straight rate hikes on the economy. However, policymakers also considered that further hikes could be needed in the month ahead. It will likely be a pretty close call when policymakers meet on Tuesday. Australian inflation has fallen for 2 consecutive months, cooling from a high of 8.4% down to 6.8%. However, this is well above the 2% target level. Still, Wall Street is pricing in a pause, which has weighed on the Australian dollar in recent weeks. And the British over 50s specialist service company Saga will report its results for the past year on Tuesday, as the share price trades at a fraction of its all-time high hit 5 years earlier. Investors will be looking for reassurance from the company's full-year results. Analysts are expecting the travel and insurance company to post profits of £20 million for 2022, the bottom end of its £20 to £30 million guidance. Previously, the company had laid out guidance for profits of £35 million to £50 million for the year, but downwardly revised these figures 3 times, blaming the rising cost of insurance claims. Saga confirmed that it was looking for buyers for its in-house insurance business. The results come as the share price has slumped from a high of £30 in 2016 down to a low of 74 pence in October. Since then, the price has edged higher to current levels of £1.30. Hilton Food Group, due to report full-year results on Wednesday, downwardly revised expectations at the end of last year, citing a high inflation environment taking its toll. Sales are expected to increase 20% year-on-year and hit a new record of £3.97 billion, with all regions except for Central Europe expected to deliver double-digit growth. At the same time, adjusted pre-tax profits are forecast to drop 19% to £54.6 million, owing to rising costs and higher interest rates, and as well increased investment to get new acquisitions on projects up and running. These acquisitions mean that the firm is well positioned for growth over the medium term. The Canadian employment rate rose by more than forecast in February for a third straight month. The data highlighted the job market's resilience, which is at odds with expectations of a slowing economy and the Bank of Canada's decision to pause their rate hikes. Unemployment is expected to remain at 5% and job creation expected to fall by 4,200. Wage growth was 5.4% in February and will be under the spotlight. Another month of strong job growth and wage growth will of course add pressure on the central bank to consider further rate hikes. And the owner of brands such as Corona and Casa Noble Tequila, Constellation Brands, is due to report Q4 earnings on Thursday, which are up against tougher comparatives. This is particularly true for the beer business premium brands, which are likely to be feeling the pressure of consumers reining in their spending. Wall Street expects revenues to fall 4.4% to $2 billion. Beer sales are expected to drop 4%, while wine and spirit sales are expected to decline 5.1%. The wine and spirit arm has been struggling for some time. Adjusted earnings per share are forecast to drop for a second straight quarter by over 22% to $1.84, meaning lower sales and tighter margins. Counterquote markets are hoping that Constellation Brands will aim to grow beer sales by 6.7% and wine and spirits by 2.4%, as well as target earnings per share of $11.78. And the end of the week brings an update on the non-farm payrolls over in the US. Well, the US labour market continues to show incredible resilience, even with high inflation and rising interest rates. The first 2 job reports of the year pointed to a tight labour market. February was another blowout month that saw 311,000 jobs added ahead of the 225,000 forecast, but down from the 504,000 new jobs added in January. Meanwhile, the unemployment rate rose to 3.6%. That was up from a 50-year low of 3.4% in January, as jobless claims also pushed modestly higher. Will March be the month to see weakness? Expectations are for a solid 240,000 jobs to be added. Average hourly earnings are expected to tick higher to 4.7%, up from 4.6%, and a strong report, of course, could fuel Fed rate hikes, which could drag on stocks and boost the US dollar. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from Barratt Developments, Reckitt Benckiser Group, F&C Investment Trust, Convatec Group, Rentokil Initial and Smiths Group. And in the FTSE 250, we'll hear from Howden Joinery, Man Group, Travis Perkins, IMI, Murray International Trust, Domino's Pizza, Savills, Vina Capital Vietnam, Opportunity Fund, Games Workshop, Mercantile Investment Trust, Finsbury Group and Income Trust. So there you have it, a lot of data coming out this week and a couple of interest rate decisions down in the southern hemisphere to keep an eye on. Everyone's heads are still bobbing back and forth looking for clues from many sources to which way both interest rates and inflation is heading next. It's enough to make even the coolest heads dizzy. But talking of cool heads, of course, Atlantic Capital always keeping our heads cool, whatever the market throws at us, ensuring our clients don't end up dizzy and bewildered. So do give us a call if you're looking for investment advice. But in the meantime, that's it from us for the start of the week. And as always, our regular reminder about our app delivering you our award-winning trading signals, which of course are free to receive and to use. So that's it. Thanks so much for watching. And don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.